Is the SUD Life Century Star Plan truly the key to long term wealth creation, or does it fall short of expectations? Let us find out the answer to this question through an in depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So, this is a non-linked, limited premium, non-participating savings life insurance plan. So, some of the key features of the policy are: you get life cover along with guaranteed maturity benefits, you get a fixed premium payment period of 7 years, and you have the option to withdraw from the 13th year onwards with attractive surrender benefits. And also, you're eligible for tax benefits under Section 80C and 1010D of the Income Tax Act. And there are policy terms available between 12 to 16 years, and you can also pay premiums annually. So these are some of the key features of the policy, and there are benefits like death benefit and maturity benefit. So some of the advantages are: you have the option to enhance your policy coverage with riders. There is loan facility available up to 70% of the surrender value, and for annualized premiums of 1.5 lakh or more, the guaranteed maturity benefit is enhanced by 2%. So all plan benefits come with a guarantee. However, the disadvantages are: the premium payment term is locked at 7 years, which may not align with every investor's needs. So premiums are payable only on an annual basis, leaving no flexibility in choosing other payment frequency. So the plan does not offer loyalty additions for long-term policyholders. While the benefits are guaranteed, the overall returns are modest and fall short compared to other investment options. So these are some of the disadvantages that we need to keep in our mind before deciding to invest in this policy. Now, as we have a basic idea about this policy, let us move on to the analysis part of the video, where we are to conduct an IRR analysis to help us make a more informed decision. But if you do want to know more about certain aspects of the policy in detail, you can refer to the policy brochure. So here, for calculation purpose, let us assume that 40-year-old male has opted for this plan with a sum assured of 10 lakhs. So the premium payment term is 7 years and the policy term is 16 years. The annual premium amount amounts to 1 lakh. At the end of the policy term, the maturity benefit works out to be 12.37 lakhs. So this translates to an internal rate of return of just 4.45% as per the policy's maturity calculator. So while the guaranteed payout may appear reassuring, the actual returns are quite low, even lower than several debt instruments available in the market. So over the long run, such modest growth can hold back wealth accumulation. As a result, this policy may not be sufficient to build the corpus required to meet your financial goals. So now, as this policy is not giving us the desirable outcome that we need, let us move on to the comparative analysis, where we are going to explore an alternative strategy in which we are going to use the same premium, but instead of investing in an insurance cum investment policy, we are going to split the premium and invest in insurance and investment separately, just to see whether that can yield us with better returns. So a term insurance policy for life cover purpose with a sum assured of 10 lakh cost us only 19,500 rupees annually. So the policy term is 16 years with premiums payable for just 5 years. This leaves us with a balance of 80,500 rupees each year out of the 1 lakh budget that can be directed towards investment. From the 6th and 7th year onwards, the full 1 lakh annually becomes available for investment. If the balance is invested in an equity mutual fund, the corpus at maturity grows to 26.50 lakhs. After accounting for capital gains tax, the post-tax maturity value stands at 24.10 lakhs. So this translates into a post-tax IRR of 9.83% for the combined strategy of term plan plus equity mutual fund. If you have any doubts regarding how we have calculated tax for equity mutual fund, you can see that we have presented a small tabular column for your easy reference in the screen, which you can pause and see. So compared to this, the SUD Life Century Star Plan delivers an IRR of only 4.45%, which is significantly lower. So this demonstrates that by separating insurance and investment and aligning your investments with your risk profile and time horizon, you can achieve far better results. So what is the final verdict then? Is investing in the SUD Life Century Star Plan worth it or not? So this policy promises guaranteed returns on savings. However, relying solely on such guarantees is not ideal for long-term wealth creation. Our analysis shows that while the benefits are assured, the returns are insufficient to beat inflation, making it difficult to meet the rising cost of future goals. Another limitation is that both the policy term and premium payment duration are fixed, leaving little flexibility. This rigidity often results in a mismatch between personal financial goals and the policy's maturity timeline, and it also has a high agent commission. So, combined with the low returns, inadequate life cover, and a rigid cash flow structure, the plan proves unsuitable for building a strong portfolio. So, the biggest drawback lies in the product's design, mixing insurance with investment. So, a better approach would be to secure your family financially with a pure term life insurance policy and invest separately in either debt or equity instruments aligned to your risk profile and time horizon. If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.